in partnership with CommSec.
Joining us from CommSec is Tom Piotrowski. Good morning to you, Tom. So we've got some crucial employment data coming out of the US. What are we expecting?
Quite important, Kenny. Good morning. In the context of what's happened in recent times, you've seen this very aggressive move higher for US borrowing costs over the course of recent times. We spent a lot of time talking about what the US Central Bank or the Federal Reserve might do when it comes to interest rates. But when it comes to the rates that are set by the market, a 10-year government bond has moved aggressively higher in recent times. It's up by as much as 0.5% over the course of the last 6 weeks. And that reflects a whole bunch of things, not least of which is the strength of the US economy. The employment market's still doing very well. But the Trump tariffs are antagonising interest rates, and the prospect of inflation being embedded at these levels is pushing these interest rates higher. So if this employment figure tonight, for example, comes out on the warmer side of things, that will consolidate these rates at higher levels. A softer number, which is possible given some of the interference that we've seen from natural disasters recently, that would at least see the pressure come off bond yields, meaning long-term bond yields would fall, and that would be a positive for stocks, which have been just having a bit of trouble in recent days because of that relentless march higher for interest rates. So having said all of that, Wall Street was closed last night, Kenny, to observe a national day of mourning for the passing of former President Jimmy Carter. But the futures in after-hours trade have been under a little bit of pressure. The S&P 500 and NASDAQ futures are down by about 0.25%. But notwithstanding that, we've got SPY futures pointing to a gain for the ASX 200 when we kick off. That index is expected to be up by about 0.33%. European markets were open for trade last night, and we saw better performances from the resource sector, and that's a factor that's going to be supportive for the local market when we kick off later on tonight.
Okay, Tom, we'll speak to you again soon. Thank you.